Yes, sir, please.
Sir, good afternoon, everybody. As of taxpayers, Chennai has been opened in taking the important policy framework of the government of India, taxation matters directly to the taxpayers' doorstep. This regard, DGTS has been regularly conducting webinars and outreach programs on various subjects that are of immediate relevance, that are important to the trade, workers and exporters. Today's webinar topic is 56th GST Council meeting, key highlights and discussions, which is being conducted in association with Conference of Indian Industry, Karur District, Southern Region, the Madhya District, Teeny and Small Scale Industry Association, Tamil Nadu. Yet another initiative in our endeavor to add down the taxpayer in taxation matters, further increasing the ease of doing business. I am Dwarana Reddy, Assistant Director, DGTS Chennai, your moderator in this session. The mic is muted and the camera disabled for all the participants other than speakers in the session. Mic is muted to avoid any unintended audio interruption so that the speaker is audible to all. Camera is disabled to avoid bandwidth related issues to have an interruption free session. However, the chat box is enabled for all. The participants can register their questions, queries, doubts in the chat box during the course of the session. It will be answered in the FAQ session. So that due to illness of Principal ADG, he has sent a message to all taxpayers who join the webinar. I read out my introduction message. Good afternoon, everyone. Warm welcome to all of you. Today's webinar is 56th GST Council meeting key points, live discussions. The Council introduced GST 2.0, marking a fundamental reset in our indirect tax regime under the new system. GST slabs have been simplified to 5%, 80%. The 40% demat rate for resin and luxury goods. Significant reliefs were announced. Life and health insurance premiums are now fully exempt from GST. Household burden. Payments will be faster. Exporters are impacted. Yes, may now receive 90% provisional refunds. The automated risk-based system, November 2025. Also, simplified automated GST registration scheme for small, low-risk taxpayers will be rolled out. Registration 3 working days. Finally, the goods and service tax appellate tribunal will be operational by end of effect. We expect the resolution of disputes of taxpayers. Let this webinar be a forum for clarifying these reforms, addressing your questions, and ensuring these powerful changes under GST 2.0 serve well. Now I am moderator. Now I request Mr. Suresh Ji,
Yes, sir.
Vision 230, Director, Future Infotech, CA, deliver guest address, please. Suresh sir, go ahead.
Yes, sir. Good afternoon, ladies and gentlemen. On behalf of JCA Karur District, I warmly welcome you to all to this exclusive session on the key highlights of the 56th GST Counseling meeting. It is indeed a privilege to have all of you join us for very timely and important discussion. As we are aware, GST has been one of the most transformative reforms in India's economic framework. By subsuming multiple taxes into a single unified system, it has simplified compliances, reduced inefficiencies, and created a truly national market. Over the years, this GST Council has continuously taken proactive steps to refine its structure, making it more responsive to industry's needs while ensuring revenues buoyancy for the government. The recently concluded 6th Council meeting is of particular significance. Several discussions from this meeting will directly impact industries across sectors, from manufacturers and textile to service and MSMEs. For a district like Karur, which is rapidly positioning itself as a hub of growth under Vision 2030, understanding these developments becomes all of the more crucial. The decisions taken not only influences compliance and taxation, but also play a vital role in supporting India's larger economic goals, including the Make in India initiatives. Today's session provides us with a unique opportunity to hear directly from the senior officials of the Directorate General of Taxpayer Services, Their insights will help us decode the changes, assess their implications, and prepare our businesses for effective implementation. Thank you very much. Thank you, sir. Thank you very much for this.
Sir, you're audible.
Yeah, yes, sir.
Thank you very much for your appreciation. If you have any more points, please send that through mail. We'll take up with our board or wherever required. The appropriate form will take up the issues. Senthil Kumar, Honorable Secretary, Beniticia, to deliver the guest address, please. Senthil Kumar, sir. Suresh, I think he is not joined, sir. Suresh. Sureshji,
Yes, see.
I think he is not joined, Senthil Kumar.
Oh, not in there.
Shall we go ahead?
Yes, sir.
Shall we go ahead? Because I think he is not joined. Mr. Senthil Kumar.
Just a second.
You have a number, ask him, sir.
I will check, sir.
Yes, sir. You have a number, just ask him.
Yeah, sir. Yes, sir. I will check, sir.
ठीक है वो बात कर रहे हैं
Sir, not in there, sir.
Sir, he joined, huh? He informed that his network is not proper. He will just join. Suresh, sir, if you don't mind, we'll invite you for vote of thanks.
Yes.
Sivajan, sir, I feel I'll call him for vote of thanks. Sir.
Yes, sir. Yes, sir. Please, sir. I think that would be fair also.
Now, we have come to the main part of the program today. Make the topic presentation. We have a distinguished person, the legend of the GST, our best friend, Srinivasan, sir. You can say he is a library of GST. As for minority, he is a GST library. Well, let us start to present the topic, sir, without delay.
Yeah.
Go ahead, sir.
Yeah. Thank you, sir. Thank you very much for moderating this session. At the outset, let me first place my gratitude to Principal Additional Director General, DG Taxpayer Services, for conceptualizing this program, which is absolutely essential from the taxpayer's point of view as well as consumer's point of view. I also like to place my gratitude to the Additional Director General, NASAN Chennai, for approving and guiding me in making this presentation. So, without much ado, let me share the PowerPoint presentation so that it will be visually attractive also. So, this is the presentation I'll be making. Just a minute. Yes, sir. So I hope the presentation visible. One line of confirmation will help me to proceed further, sir. So in today's session, we'll be having a comprehensive analysis of the 56th GST Council meetings, proposals, and the recommendation. Before I begin my presentation, let me have this disclaimer. The information provided in this PowerPoint are the views of the faculty and purely to understand the law in simple terms. For all legal purposes, the viewers may please refer to the respective acts, rules, and notifications. And any reference that has been made to the provisions of the CGST Act and the rules made thereunder also refers to a parallel provisions, similar provisions of the GST Act, the GST Act, and the rules made thereunder. So with this disclaimer, let me begin the presentation today. Uh, Probably the first question that requires to be answered is what is in store for the next 60 minutes, in which now I'll be talking to you about the recommendations of the 56th GST Council meeting. What are the proposed changes in the legislation? What are the clarifications that has been issued? What are the trade facilitation measures that has been recommended? And more importantly, GST 6 GST Council meetings recommendation are seen as a very radical reform with reference to rate rationalization. So what are the changes in the rate that has been brought consequent upon this recommendation will be the core topic that we will be discussing today. So it will be all about rate rationalization. It will be about enhanced ease of doing business. It will be the clarification that has been issued as per the advisory given by the GST Council. What are the sectoral impacts that has happened with reference to each and every sector? We will be seeing that how much rate has been reduced with reference to automobile sector, healthcare sector, renewable energy sector, household sector, then restaurant, food industry, hospitality industry. We will see one by one what is the sectoral impact. There has been 4 FAQs that has been issued by the CBIC. So that in fact cumulatively about 150 questions have been answered. Most of the apprehensions were by the trade industry as well as consumers, and most of the apprehensions have in fact been answered. These FAQs that has been released from time to time. Let me also remind you that the 56th GST Council meeting was in fact scheduled for 2 days on 3rd and 4th of September 2025, but the 2-day meeting was compressed into a single day meeting with extended deliberation. It concluded within 1 day. So that is the effective manner in which the meeting was conducted, and finality was reached with reference to the recommendations that has been made. GST, this 2.0 is how it is called, and it is treated as the next generation GST reforms. And GST 2.0 represents a strategic, principled, citizen-centric evolution. This landmark tax reform framework in this country, which is expected to enhance the quality of life of every last citizen of this country. And the entire exercise and the objective of this reform into GST 2.0 actually rests on 3 pillars. Pillar number 1 is the structural reforms, where the government will be changing the legislative aspects. Second is the rate rationalization, where we have now started adopting the 2-rate GST structure. So that is a very key change that has been recommended, and ease of doing business and ease of living. So these are the 3 pillars on which the entire GST 2.0, the next generation reform, actually rests. Council, in fact, approved reforms with multi-sectoral and multi-thematic focus on improving the lives of all citizens, ensuring ease of doing business, including small taxpayers, small traders, as well as the businessmen. Second focus was on rate rationalization with an objective to ensure that the common man, labor-intensive businesses, the farmers, agriculture, healthcare sector, as well as the education sector, which are the key drivers of the economy, are benefited. And the entire reform process is expected to impact not only the taxpayers, but consumers as well as the business. So these objectives, this next generation GST reform, in fact, has been recommended. Most of the changes that has been proposed as part of this recommendation have come into effect, especially the rate rationalization, where there has been a substantial reduction in the rate of taxes, have taken effect from 22nd September 2025, except for 2 very important commodities, that is cigarettes, chewing tobacco, Zarda, unmanufactured tobacco, BD, which generally falls under Chapter 21 and Chapter 24, where the rates will be notified later as per the recommendations of the GST Council and as per the decision of the chairman of the chairman of the GST Council is the finance minister at the center. So the changes with reference to these commodities, that is Chapter 21 and 24, cigarettes, pan masala, and tobacco products, will come into force a little later, whereas all other changes which has been recommended has already come into force from 22nd September 2025. So what is this rate rationalization is all about? So let me take you down the memory lane. In fact, the rate rationalization concept itself was initiated by the 45th GST Council meeting with the formation of a group of ministers who have been given this responsibility for restructuring the rates with reference to GST. This GOM was formed on 24th of September 2021, and on the basis of the recommendations made by the group of ministers, the four-tiered GST structure has been proposed to be rationalized into a two-rate structure, that is standard rate of 18%, merit rate of 5%. Apart from that, a special demerit rate of 40% for select goods and services also been suggested. So this is so just have a comparison. The existing rates, before this rate rationalization has been recommended, we had 5 rate structures: 0, 5, 12, 18, and 28. That has now been proposed to be changed into 5%, 18%, and a special demerit rate of 40%. Of course, whatever was noted as nil rate of duty, nil rate of tax, or 0% rate has now been shifted into the exemption category. So there will not be any schedule which carries nil rate of tax. So this is one very important shift that has happened after the GST Council meeting. So all these changes, in fact, has been brought into effect from 22nd September 2025 with the issuance of a notification 9 of 2025 central tax rate. So what is the significant impact with reference to the changes that has been proposed is that lot of commodities, the tax rates has been cut. Tax rate with reference to household essentials, especially soaps, paste, Indian breads, the tax rate has been reduced from 5% to nil, boosting its affordability. Life-saving drugs, medicines have been reduced from 12% to nil percent or 5%, making healthcare also affordable. Two-wheelers, small cars, TVs, air conditioners, cement rate has been cut, from 28% to 18%, bringing a lot of relief for the middle class. Farm machinery, irrigation equipments have been cut from 12% to 5%, reducing the farming cost also. Pan masala, tobacco products, aerated drinks, luxury goods will be taxed at 40%. Of course, the compensation cess will not be there for commodities other than tobacco and pan masala. Exemption has been extended for healthcare, education, and insurance sector. So this is the significant impact as far as the rates are concerned with reference to each and every sector. Just to give a statistical understanding of how these rates have been reduced. So let us now see that the commodities which attracted, in fact, 5% has been brought down to nil rate for about 6 commodities. Major impact has been a shift from 12% to 5%, where about 249 commodities, in fact, the rate has been substantially reduced. And then certain commodities which are attracting 18% have now been shifted to nil percent. About 10 commodities have been done. And the next major impact after 12 to 5% is from 18 to 5%. No, it has been reduced to from 18% to 5% on about 59 items. And no, from 28% to 18%, there has been a reduction on about 28 commodities. So in effect, just to put everything in the right perspective, we can see that for about 371 commodities, the rate has been reduced either from 28%, 18%, or 12% to either 5% nil rate or 28 to 18%. So there has been a substantial reduction in the rate of tax. Apart from that, a few commodities that has also seen an increase in the rate of tax. About 40 commodities have seen an increase in the rate of tax. That's precisely because where the goods have been subjected to 40% from 28%, but without compensation cess. So if you add compensation cess, it would have been much more than that. Probably if you take automobile sector where the compensation cess vary between 15% to 22%, minimum tax outflow will be 28 plus 15, which is 43. But now, without compensation, says they will be attracting only 40% GST. So apparently, the rates have come down there also, but the effective rate has been increased from 28% to 40%. So this is what the statistical impact as far as the rates are concerned. With reference to certain services also, transportation sector, there has been an increase, but with from 12% to 18% with the availability of tax credit. Job work from 12% to 5%. Residual job work, no, not elsewhere specified, is a slight increase from 12% to 18%. But that also comes with the advantage of the input tax credit, and therefore, no, that will not impact the cost of such supplies. Construction sector and works contract also have seen an increase from 12% to 18%. So this again is with reference to services. So the rates in fact has been revised, as I said, like in supersession of the earlier notification. So as far as GST is concerned, whenever we want to know what is the rate of tax for a particular commodity or particular goods, the first point of reference shall always be notification 1 of 2017. And it had various schedules. So revised notification has been issued, notification 9 of 2025, and that in fact is in supersession of the earlier notification. So the crux of the matter here is that now after this rate rationalization has happened and the reduction in rate have come into place, whenever you want to see what is the rate of tax for a particular commodity under a particular HSN, is notification 9 of 2025 central tax rate, which will have to be referred, and not notification 1 of 2017, which we have been referring thus far. The next uniqueness of the revised notification is that it has about 7 schedules, and each schedule represents a particular rate of tax. So let me go on an IGST rate, which is now a combination of CGST plus SGST. So Schedule 1 speaks about this 5% rate, which is imposed on 516 items. And these items are generally used for normal consumptions and sustenance of life. Second is Schedule 2, which attracts 18% GST, that is the demerit rate, for about 640 items, which are generally industrial consumptions, and therefore no input tax credit will be available for them. Next is Schedule 3, where we have 40% GST that has been imposed. Obviously, 40% is the maximum rate of tax that can be imposed under the GST law, which is imposed on about 13 items, which includes carbonated drinks, high capacity motor cars, motorcycles whose capacity is more than 350cc engines, aircrafts, yachts, revolver pistols, actionable claims like betting, gambling, lottery, online money gaming, horse racing, etc. So if you can see, the maximum rate of tax at the rate of 40% has been imposed predominantly on sin goods or luxury goods, not on those goods which are used for as normal consumption for sustenance of life, or majority are used for industrial consumptions. So these 3 schedules are quite important, which probably will be applicable to almost 96% of the supply that happens with reference to goods. Apart from that, you also have 4 schedules that has been prescribed, where the rate of tax has been prescribed at about 3% for some special items falling under Chapter 71. Chapter 71 deals with gold, silver, jewelry, ornaments, imitation jewelry, coins, etc. 0.25% has been imposed on about 3%, goods, that is diamonds, synthetic diamonds, naturally cultured and semi-precious stones, and 1.5% has been imposed on rough diamonds and precious stones. Apart from that, we also have a rate of 28% that has been imposed on 6 items, predominantly pan masala, tobacco products, falling under chapter 21 and 24. But these commodities will also attract compensation cess ranging from 15% to 200%. So these 28% rate of tax is still there for chapter 21, and this will attract compensation cess. So this is how we will have to comprehensively understand the importance of notification 9 of 2025. We also have one more notification that has been issued, notification 10 of 2025, which is also in supersession of the notification 2 of 2017, speaks about exemptions. Earlier, as I said, no, notification 1 of 2017 had a schedule which carried nil rate of tax, where the GST applicable is 0%. Now all those things have been shifted to exemption notification, and about 171 goods have been exempted in toto. This is also issued in supersession of notification of 2017. So there is no nil rate as on date. It is only either exempted 5%, 18%, or as the case may be. Some of the items like natural honey, fruits, vegetables, nuts, agricultural produce, duty credit scripts, handloom, hearing aids, passenger baggages, etc., to name a few, that have been shifted to the exemption. They are all exempted from GST. Similarly, as I said, compensation cess has also been withdrawn for all products except pan masala and tobacco, falling under chapter 21 and 4 by virtue of notification 2 of 2025. So compensation cess will continue on tobacco, pan masala till the loan and interest obtained by the government to compensate loss of revenue for the states are fully discharged. Once this obligation under the Constitution is discharged, probably the entire scheme of levying compensation cess will be withdrawn. And as far as services are concerned, thus far we have been seeing only with reference to goods. As far as services are concerned, notification 15 of 2025 has been issued, but this notification is not in supersession of the earlier notification, but amends the earlier notification which prescribes the rate of tax, that is 11 of 2017. It's precisely because of the fact that prior to rate rationalization as well as after rate rationalization, generally most of the supply of services actually attracts 18% GST, and therefore there was no necessity to issue a fresh notification. So government in its wisdom thought that notification 11 of 2017 requires to be amended with the revised rate of tax with reference to various supply of services. Now we will see sector-wise what is the impact, because probably that will interest us more. Ultra high temperature milk is now exempted, bringing it on par with other dairy products, because that was actually, this UHT was actually attracting 12% GST earlier, but now that has been exempted. So it is now part of the 171 items that has been exempted by virtue of notification. This is with reference to dairy products, but plant-based and soya milk drinks, which was actually attracting 12% and 18%, rate of tax has been reduced to 5%. There were a lot of discussions with reference to Indian breads like parota, chapati, etc., pizza base, etc. What rate of tax, which attracts, what is the rate of tax? There was a lot of discussions with reference to that. Now everything has been harmonized. Indian breads of all varieties, toilet soaps, bars, toothpaste, toothbrushes, etc., have all been brought to 5%. So now there is a synchronization and harmony as far as the rate of tax is concerned to various which fall within the same category. So if you can see, I have just now tried to list out the various commodities which attracted earlier a higher rate of tax, for which the GST has now been used to 5% or 18%. The only difference is that this cold carbonated drinks, in fact, attracted 28% plus compensation cess. Now they will be attracting a standard special rate of 40%. Butter, ghee, sugar cubes, paneer, channa, cheese, etc. are now charged at 5%. So this again is a major reform where there is a reduction in the rate of tax. The other common man items obviously has also been reduced. So if you can see list itself, we can be convinced that most of the items fall under the 5% category. So here also you can see most of the items actually fall under the 5% category. The one very important thing that should be noted here is the rate of tax that is applicable with reference to footwear as well as apparels. Footwear and apparel rate of tax is on the basis of the maximum retail price at which such goods are sold. So footwear which are worth up to 2,500 rupees will attract 5% GST. If the footwear's worth is more than 2,500 rupees, then it attracts 18% GST, which was in existence even pre-rate rationalization. Similarly, the apparels also will attract a different two-rate slab structure with reference to their maximum retail price. So MRP also has got a very significant impact with reference to these two commodities when it comes to the rate that is applicable on them. So MRP has some significance under GST also for determination of the rate of tax. Healthcare sector, all medicines are taxed at concessional rate of 5%. Corrective spectacles have been reduced from 12% to 5%. Health insurance policies, including family floater policies, senior citizen plans are now fully exempted. Group insurance scheme is not exempted. It still attracts 18% GST. So that is something which we'll have to note on clear terms. Education sector, GST has been withdrawn on most of the stationery items. If you can see, like the erasers, the maps, the atlas, the globes, pencil, crayons, pastels, sharpeners, then excise notebooks, graph notebooks, and other lab notebooks, etc. And geometry boxes, sketch pens, color pencils, color boxes, etc. All have been now will be exempted. It attracts 0% GST. They have been reduced from either 5% or 12%. But what significantly one will have to note is that higher education and private education still attracts 18% GST. There is no change with reference to that. Know that across the entire educational sector, primary education, secondary education, higher secondary education, also higher education, which leads to a recognized degree by the law of the land, all kept outside the ambit of GST. But higher education and also private education, like coaching classes for competitive exams or coaching classes for taking entrance examinations like IIT entrance, etc. These private educations will still attract GST. So this is one very important aspect which we will have to note, where there is no change that has happened with the education sector. With reference to automobile sector, I think automobile sector is the most beneficiary as far as this rate rationalization is concerned. The vehicles have been divided into two classifications. One is the small cars, the other one is mid-sized cars or sports utility vehicles, MPVs, etc. Small cars means petrol car or LPG or CNG cars whose engine capacity is 1200 cc, where when it is diesel, it is 1500 cc. The length of the vehicle should be up to 4000 millimeters. All these will attract 18% GST instead of 28%. Similarly, three-wheelers, buses, ambulance, trucks, trailers now fall under 18% GST. Then apart from small cars, the other mid-sized cars, earlier they were actually charged to 50% GST, like 28% GST as well as 17 to 22% compensation cess, which ultimately led to about an average of 50%. Now that has also been reduced to a GST rate of 40%. So there is a reduction with reference to mid-size as well as SUV also. With reference to motorcycles up to 350cc will attract only 18% GST, whereas motorcycles above 350cc will attract 40% GST. Again, there is a reduction here because there is no compensation cess that is imposed on these particular items. Buses for passengers have also been reduced to 18%. three-wheelers like auto rickshaw also from 28%, it has been reduced to 18%. So automobile sector, in fact, has seen a substantial reduction in the rate of GST, and probably we can also see the impact of this. Most of the automobile chains have declared reduction in the base price of their different models of their vehicles, including cars as well as buses and two-wheelers. Renewable energy sector, again, no, the rate has been reduced from 18% to 5%. Bicycles fall under 5% from 12%. Solar panels, windmills have been reduced to 5%. But one aspect which will have to be seen as far as renewable energy is concerned is that there are certain commodities under this renewable sectors which will still attract, like the parts of these items, solar panels, PV cells, windmills, still attract 18%, whereas the final supply, which happens with reference to these items, will attract only 5%, which means there can be a practical difficulty of rate distortion where the supplies are charged at a higher rate while the output supply will be charged at a lower rate, and that might lead to substantial accumulation of income tax credit, which becomes unutilizable in the electronic credit ledger. So renewable energy and similar aspect is there under healthcare sector also, with certain medical equipment parts attracting 18%, whereas the equipment itself will attract 8%. But these rate distortion has come down very less nowadays, and unlike earlier where a lot of commodities and lot of services attracted this inverted duty structure, now it has been reduced to a barest minimum. The construction sector has also seen substantial benefit. Cement, which is the main raw material for construction industry, rate of tax has been reduced from 28% to 18%, which probably makes housing sector more affordable for general public, as there could be a reduction in the construction cost because of the reduction in the tax with reference to cement. The other commodities like iron and steel, aluminum, etc., the 18% is still retained. Therefore, there is a harmony as far as the main raw materials are concerned. Most of them are now attract only 18%. Electronic devices, there is no change with reference to smartphones and laptops. However, if you can see, the monitors and projectors, which were attracting 28%, now will attract only 18%. So there is again a substantial reduction with reference to these electronic products. And also the FMCG goods like ACs, dishwashers, and TVs, set-top boxes, monitors, projectors, etc. They have been brought down from 28% to 18%. Probably FMCG goods also will see substantial progress in their sales and probably contribute to the economy of this country. Rates with reference to services, beauty, wellness, fitness centers like salons, gyms, yoga centers, which were actually attracting 18% GST earlier, now will attract 5% GST, but that comes with a caveat that they will not be able to avail the input tax credit with reference to the inputs that are associated for rendering these services. Job work also attracts 5% GST. It has been cut from 12% or 18% to 5%. And this will benefit pharma and leather industries. So again, that is very good news for this sector. There are certain residual job work services which will still attract 18%, which has not been specified elsewhere. Hotel accommodation also will see a substantial reduction. The hotel rooms uh, uh, which has a tariff of about 7,500 rupees per day has been kept at 5%. And when the tariff is more than 7,500 rupees, it will attract 18% GST. And you can also see that the movie tickets worth rupees 100 or lower will now attract only 5%, which were actually attracting 12% earlier. And for sporting events, the GST has been increased from 28% to 40%. So these are some of the very important changes that has happened with reference to these areas, entertainment industries. Passenger transport continues to be at 5%, while goods transport operator has got the flexibility either to pay 5% with GST or 18% with GST. There were a few questions with reference to this point. I know some transport agencies would have opted for paying GST uh, in forward charge mechanism at the rate of 12% with the benefit of ITC. Now it has been increased to 18%. Is there an option to now go back to 5% without availing ITC? The answer is no. Because no, once the option is exercised, irrespective of the rate of tax, the option shall continue for that financial year. Once on completion of the financial year, the option is always available with the GTA for uh, shifting from 18% to 5%. But once the option has been exercised for this financial year, they cannot go back to 5% without ITC. So this is one aspect which will have to be with it. Yeah. Then, as I said, luxury and sin goods, mid-sized, large cars, SUVs actually attract 18% GST. Tobacco products, cigarettes, pan masala, cold drinks, whether they are carbonated or fruit pulp based, or whether they are energy drinks, non-alcoholic energy drinks, all of them will now attract a common rate of 40% uh, without compensation cess, of course. So non-alcoholic also will attract 40% GST. Since it has been decided to end the compensation cess levy, the tax has been increased to maintain a pre-rate rationalization level of tax with reference to these commodities. Still, there is a reduction. So that is something which consumers will have to note. There will be a substantial reduction. So this is as far as rate rationalization is concerned. There are a lot of trade facilitation measures also which has been recommended by the GST Council. The first and foremost is about this grant of provisional refund. We know that in terms of subsection 6 of section 54 of the CGST Act, read with rule 91 sub rule 2, any refund application that has been filed for unavailable or unutilizable input tax credit on account of zero rated supply, that is no for exports or supplies made to a SEZ, 90% provisional refund can be sanctioned by the proper officer. Earlier, it remained as a discretion of the proper officer, but now this, as the entire mechanism is on the basis of identification and evaluation of risk with reference to the applicant by the system. So the system will identify whether any risk parameter is there. No risk parameter is identified, then the proper officer can go ahead in sanctioning the 90% refund claim. For an exceptional situation, the proper officer still retains his discretionary power, but to be recorded in writing. So instead of granting the refund provisional basis, can proceed with detailed scrutiny and then finalize the refund claim. Of course, all these comes with a sunset clause of 60 days, date on which the refund claim is filed. So, irrespective of whether 50% of the provisional refund is sanctioned in 7 days in terms of Rule 21.2 or within a period of 60 days, now this provisional refund is on the basis of identification and evaluation of risk by the system. There are certain red flags, risk parameters that has been identified by the system. So that will be used for analyzing the data and identification of a particular taxpayer's risk score. However, there is an explicit moratorium with reference to certain commodities like areca nut, pan masala, tobacco products, essential oils. These commodities have been kept outside the facility for this provisional refund, and all those taxpayers who have not undergone the Aadhaar authentication in terms of Rule 10B, they will also not be eligible for this 90% provisional refund within 7 days of filing the application. So, Aadhaar authentication at the time of taking registration or subsequently within 45 days of grant of registration has become very, very important, especially when somebody has plans to file a then this concept of this concept of 90% refund claim was restricted only for zero rated supply, but now this has been extended to inverted duty structure also. But let us be very clear of the fact that there will not be so much of rate distortion between the input tax rate and the finished goods tax rate. or the output supply tax rate, because no substantially rationalization has happened. But still, as I said, there are certain areas where there is a rate distortion between and the output. In such situations, the inverted duty structure concept will still come into play. In such situations, 90% of the refund claimed on provisional basis can in fact be sanctioned for inverted duty structure also, just like it has been done for zero rated supplies. Government, in fact, the GST Council has recommended that uh, 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 legislative amendment under the CGST Act will have to be brought in. But pending that legislative amendment, it has been instructed that the CBIC will proceed in formalizing the grant of provisional refund equivalent to 90% of the amount, especially with reference to inverted duty structure, as in the case of provisional refunds on account of zero rated supply. So this is again a very important and very progressive move that has happened, especially with reference to inverted duty structure. This concept was applicable only for zero rated supplies, which involved supplies to SEZs, developers of SEZs, co-developer of SEZs, as well as for exports. Whereas now it has been extended to cases which fall under the category of inverted duty structure. So again, no, this is a very progressive recommendation that has been so that will benefit uh, most of the industry which gets caught with this inverted duty structure. So it will be operationalized from a notified date shortly by CBIC, central government, and subsequently by all state governments also. There was a lot of question with reference to the availability of refunds in situations where the rate has been reduced. Let me quote an example here. The taxpayer would have purchased a particular commodity at 18%, his inputs would attract 18%, but after rate rationalization, the output supply would have become from 18% to 5%. So his purchases would have been at 18%, whereas his output supply shall be at 5%. So the question is whether whether the amount that is accumulated as credit would attract inverted duty structure concept, and whether a refund of such accumulated credit rising out of inverted duty structure for supplies where the rate has been revised downwardly, whether it will be applicable or not. The answer is an emphatic no. The taxpayers have purchased the input services at a higher rate of tax are 100% eligible for taking the tax credit into their electronic credit ledger. Such credit can be used for their future prospective GST tax liabilities when they make out supply, even at a reduced rate. The closing balance that is available in the electronic credit ledger. But such amount will not be subjected to this concept of structure, because it has been very, very clearly said that the input and output being same in such cases, though attracting different rates at different point of time, they do not get covered under the provisions of the inverted duty structure, and refund cannot be extended. In fact, this point has also been clarified in the first FAQ that has been issued by the government immediately after conclusion of the GST Council meeting on 3rd of September. There is also a de minimis amount, threshold amount that has been fixed, where a taxpayer cannot claim refund amount which is less than 1,000 rupees under each act. So that in fact has put in a lot of difficulties, especially with reference to low value export consignments. And these low value export consignments are generally by small exporters making exports through couriers on postal mode. Now, Council has recommended amend section 54 subsection 14 so as to remove the threshold limit of refunds arising out of the exports made with payment of tax. So if somebody pays IGST on such exports, and if the IGST amount is less than 1,000 rupees, they still are eligible for claiming refund, notwithstanding the threshold limits, the minimus threshold limits that has been prescribed under section 54 subsection 14. This also will be operationalized from a 5 date later. This GST, in fact, has brought a lot of benefits, especially for small scale sector and MSME sector. One such trade facilitation measure is simplified registration scheme for small and low risk business entities. So registration shall be granted on an automated basis within 3 days of the date of submission of the application. Generally, the law permits 7 working days for processing the registration application REG 01, and then subsequently allow or reject the application that has been made for GST registration number. Now it has been brought to 3 working days, and this scheme is eligible for applicants based on their own assessment determine that their outward tax liabilities to the registered person. So, tax liabilities to registered person will not exceed 2.5 lakhs per month, which includes the total liability of CGST, SGST, UTGST, as well as IGST. So, this scheme is provided on voluntary basis and withdrawn also subsequently. It is expected that about 96% of the new applicants might be benefited by this scheme. But let us note very clear terms that there is no change in the threshold limit for registration required for goods as well as services. Goods, it is 40 lakhs. For services, it is 20 lakhs. For both goods and services together, it still remains as 20 lakhs in most of the states, except in states of special status where limits are 50% of that. There is also an amendment with reference to the place of supply. The GST Council has proposed omission of clause of section 13(8) of the IGST Act. What happens here is that there might be a lot of domestic taxpayers might be rendering services to a person outside the country, but not directly, but through intermediaries. So in such situations, law says, that is no section 13 subsection 8 clause B of the IGST Act actually clearly states that in such situations, even though the services are provided by a person in the taxable territory, recipient is in the non-taxable territory, the amount of consideration is also received in exchange as prescribed by Reserve Bank of India. The location or the place of supply is the location of the intermediary. If the intermediary is located in the taxable territory, like the supplier, then it will not qualify in the definition of export of services, and therefore it is restricted in availing the benefits of the export incentives that is extended by the government. So now it has been decided that instead of keeping the location of the intermediary as place of supply, will be shifted to default provision under section 32, where the location is the location of the recipient of service. Therefore, now the place of supply is the location of the recipient of service who is in a taxable territory outside the country. It will be treated as export of services. Therefore, help Indian exporters of such services to claim the export. And this will help a lot of exporters in the taxable territory take such services to their clients abroad, get the benefit of export incentives. This the post supply discount. Once supply has happened, whether discount can be allowed or not. This also has been a point of a lot of contention and has in fact created a lot of litigations also. So with reference to this, so one will have to understand that there are three very important conditions associated with that, whether the post supply discount can be deducted from the transaction value or not. Three conditions are expected to be satisfied. One is the discount must be established in a pre-agreed contract. Second is that it should be linked to the relevant invoices. Third is that the recipient should be reversing the proportionate input tax credit. Only if all these three conditions are satisfied, then he becomes eligible for deduction of the post-supply discount from the transaction value. Otherwise, it is not. But this, in fact, created a lot of difficulties for extent or enjoying the benefit of reduction in the transaction value, because there will not be any reduction in the tax liability, in spite of the fact that he has reduced his transaction value. One should understand the fact that income tax law allows post-sale discounts as expenses, whereas GST does not, unless it ticks all these three boxes. Now, to sync with the other legislation also, it has been decided that there is no necessity for a pre-agreed contract with reference to extension of post-sale discount, but two conditions will have to be satisfied. Credit notes will have to be issued, and these credit notes should be a commercial credit note, which should include value also. If it is a financial credit note, which does not involve tax element, then there is no issue. GST will not interfere there. It is a commercial credit note which also involves correction in the tax liability. Then it has to be through the credit note that is to be issued under Section 34. And the recipient also should definitely reverse that credit. And any amount that is reduced will not be treated as an additional consideration, even if it is entered between the manufacturer and the end customer, which is passed on through their dealers. So these 2 points have been very clearly clarified. And finally, the post-sale discount as a consideration in lieu of promotional services performed by the dealer will not be allowed as a post-sale discount. See, for instance, if the dealer engages himself in advertising of a particular brand of car and incurs certain expenditure on account of this promotional activity, which is the responsibility of the original equipment, he offers it as a discount, that will not be treated as discount. That amount will have to be added as a consideration, which is in lieu of the promotional activity. So, circular has already been issued on the advisory of the GST Council, circular number 21. This circular clarifies all these points. There is a recommendation to make retail sale price based valuation with reference to pan masala, cigarettes, gutka, chewing tobacco, etc. So amendments in the CGST rules and notifications will be carried out. This will not be from 22nd September, but to be operationalized from a date later. Because it also has a liability of compensation cess. It will be operationalized later from a notified date. As far as GSTAT is concerned, it has been now a light at the end of the tunnel is now seen. It has been said that GSTAT will start appeal filing process from the last week of September 25. The hearings all will start from December 2025. Likely date to file the pending appeals, which has accumulated over years, will end on June 2026. That is because of the fact that in terms of subsection 1 of section 112, 1st of April 2026 has been defined as the specified date from which the timeline of 3 months will have to be calculated for all pending appeals. Therefore, from 1st of April 2026, within 3 months, that is 30 June 2026, all the past appeals will have to be filed. So this, in fact, is very, very, the situation is very clear. Taxpayers will have to take necessary steps to fit the tribunal's decisions. We know that the principal bench of SISTAT has a jurisdiction to deal with cases which involves place of supply as well as anti-profiteering, the cases that were investigated prior to 1st of April. One more additional responsibility has been added to principal bench of GSTAT, now National Appellate Authority for Advanced Rulings. So the principal bench will also undertake this responsibility also. And one will have to understand the fact that the next appeal beyond the principal bench shall lie with the Supreme Court of India, not with lower courts. The other key point which probably will attract everybody's interest is about the rate of tax with reference to admission to sporting events like IPL, which will now attract 40% GST. But this rate of 40% will not apply to admission to recognized sporting events. So the sporting events that are recognized by Government of India, like the Sports Authority of India, this 40% will not apply. So admission to other sporting events, including the recognized sporting events where the ticket price is not more than 500 rupees, continues to be exempted. So there will not be any GST on that. But ticket price is more than 500 rupees, it will attract 18%. So Sporting events now carry three slab rate. One is the nil rate, where it has to be a recognized sporting event and the ticket price shall be less than 500 rupees. It is nil. If the sporting event is a recognized sporting event, but the ticket price is more than 500 rupees, it will attract 18%. And if it is not a recognized sporting event, it will in total attract 40% GST. So these are the three slab rates that has been recommended by the GST Council and has been notified also. The government, because of the reduction in the rate of taxes with reference to most of the commodities, the government in fact has advised the business entities to revise the MRP declaration on the unsold stock which were procured prior to rate changes and that are actually sold after the rate changes. A directive has already been issued by the ministry, by the under the Legal Metrology Act. A circular has been issued. It provides temporary relief to businessmen from uh, uh, no calling back the unsold inventory and then change the maximum retail price. Temporary measure remains until 31st December 2025 or till the existing stock is exhausted, whichever occurs first. This, in fact, helps the taxpayers to ensure seamless continuance of the business. The new guidelines will help them. So there is no necessity for them to recall the stock and then amend the MRP. But if the substantial benefit is actually passed on the consumers, then that itself is enough for the business to continue. The next very important relaxation that has been given is that there is no annual return from 2024-2025 onwards for the registered taxable person up to an annual aggregate turnover of 2 crore rupees in the preceding financial year. A notification has already been issued under Section 44 to that. So to wrap up everything, uh, the entire recommendation of the GST Council has reaffirmed the Honorable Prime Minister's independent vision for simplifying tax compliances, reiterated the commitment for rate rationalization once the revenue efficiency has been attained. It actually strengthens the center-state collaboration to devise inclusive and sustainable tax governance. Revenue will not be hurt. I think that is one question which happens in everybody's mind, whether there will be a substantial reduction in the revenue for the government because there is a substantial reduction in the rate of tax. It is expected that the revenue will not be hurt. The consumption shift, the additional money that is available in the hands of the consumer will be back into the system so that the revenue actually comes on account of additional purchases. Compliance has also improved from 80% to 96%. So that also has improved. And the departments also have a strategic compliance verification mechanism with modern tools assisted by artificial intelligence and also data analytic tools, which helps to further improve these compliance aspects. Very importantly, respect for honest taxpayers. So that is also one of the main objectives of this GST 2.0. Incentivize agrarian economy and nation first objective. At 4 FAQs, so these 4 FAQs have already been issued as a facilitation measure, which clarifying most of the apprehensions that have been that would pop up into the minds of the taxpayer as well as the consumer's mind. These FAQs are available in the official CBIC website. There is also a question like whether the industry will pass on the benefit on account of GST rate reduction or will engage in anti-profiteering. Government believes and goes by the concept of trust but verify. So anti-profiteering will not be tolerated and will be administered through Competition Commission of India. If profiteering is then it will be considered as restrictive trade practice and probably the CCI will come into play. So the next generation GST reform is already there and we have started enjoying the benefits to build an Atmanirbhar Bharat. 9 rate notification has been issued, revised rates. 4 central tax notification have been issued the changes in the law has been recommended. Corresponding IGST and GST notifications have also been issued. So this is how the entire council's recommendation, a very landmark change, reform has happened with reference to GST has happened. That is why it is touted as the next GST, next generation GST 2.0. So with this, I conclude my presentation. I have covered the proposed changes in the law, proposed changes in the process, changes in the rate of taxes, especially the rate rationalization, clarification through circulars. So I stop my presentation here and then leave it to the organizers.
Sir, thank you. Thank you very much for the recommendation. I think there's got a lot of doubts, a lot of clarity also came to the participants. Must all have got clarity on the issue. Your GST Council, which you have presented today. Thank you very much. Now I request Mr. Senthil Kumar, who left to give a welcome address to extend a vote of thanks.
Yeah,
Senthil
thank you,
Kumar,
sir. Yeah, thank you, sir. Thank you for your valuable information.
Yes.
In that one, we are having some clarification because we are that MSME sector. In that sector, we are that major industries, some small subcontract people is there. That people they can't able to take that input credit. In that case, I think that the tax will be earlier that the tax will be 12%. Now that the tax is changed that 12 to 18%, it's not affordable for that small, it's a
Okay.
micro industries. That
Yes,
case
sir.
only you will consider that in future. That
Yes, sir.
that is a very important point. And one
Yes,
more
sir.
thing, we want that clarity of that capital goods we are purchased. That input credit, how to adjust that in that in our capital goods inputs. That is also we want that clarification from your end, sir.
Okay,
That's
sir.
all. Otherwise, that budget is very GST 2 is very it's a good and it's good for that all. It's a public and that industries and everything is okay. It's very helpful for us for improvement. Anyhow, that we are thanks to that your presentation and everything, sir. Thank you, sir. Thank you.
Thank you, sir.
Thank you, sir.
Sir, thank you one and all. Have a good day. Jai Hind. We'll meet again next month on webinar.
Okay, sir. Thank you, sir.
Requested,
Thank you, sir. Jai Hind.
more friends who can participate in the webinar, more and more members. Senthil Kumar, sir.
Yes, sir.
request you-
Thank you, sir.
request
Thank you,
you
sir.
all
Definitely, sir.
More members to present the webinars.
Okay, sir. Sure, sir. Thank you, sir.
Thank you. Good
Thank
day.
you.
Good day,
Thank you.
sir.
Good day, sir. Good day.